If you are looking to rebuild your credit fast after a Chapter 7 bankruptcy, then you want to watch this entire video to the end. I'm going to show you all 5 ways that you can do this right now. So get ready to take notes, rewind, and rewatch if you need to. The very first thing you want to do immediately is get a credit card. Now, this can be secured or unsecured. So this is going to be usually with a beginner credit card company simply because you're fresh out of a bankruptcy. So it's okay to go with Capital One, Credit One, First Premier, First Progress, Milestone, any of these beginner credit cards. Now, here's the catch. Some of these companies, they may have been companies that you just previously did business with and put them inside of the bankruptcy. If that is the case, then you may not be able to get approved, which is why you may have to go with a secure credit card. As I mentioned in one of our other videos, is that we do recommend Capital One. Capital One has a secure credit card system where there's 3 different pre-approval tiers, so you can start with them. Even if they were inside of your bankruptcy, I say it's still worth to go ahead and try with Capital One. I say apply for the unsecured first, and then if you're denied, you can go ahead and start with the secured card. Now, some people think that the inquiries are going to play that much of a role. It really doesn't matter when you're trying to rebuild your credit, simply because inquiries are a part of the credit journey. Okay. In order for you to start building credit, someone has to take a look at it. By the way, if you have more questions about this, all you have to do is become a YouTube member and get all of your credit questions answered. Step number 2 is to at least get 1 to 2 credit builder accounts. Okay. Now, there's plenty of credit builder accounts, as many companies have recently been popping up. So, but some very good ones to start with is going to be kickoff.com. You also have Credit Strong. You also have Self. You also have Kovo. And all of these links inside of our are going to be down below inside of the description below. And you can go ahead and learn more about those accounts. But essentially, what credit builders do is that they're an easy way for you to start rebuilding your credit, but they do have an expiration date. So most of them are going to have a 1 year or 2 year expiration date, but you can always keep re-getting these accounts because they're going to be an easy way not only to build credit, but to save money as well. Step number 3 would be to become an authorized user. This is also known as a trade line. So when you're an authorized user on someone's credit card, then all of their credit history for that particular card in the last 4 to 7 years is going to show up on your credit report. So assuming that all of the payments were made on time, then you'll be able to get those on-time payments. Just as true as if there was 1 late payment, 5 late payments, that's going to transfer over. Okay, just because a person pays their bills or most of their bills on time, you still have to make sure that that it's going to have flawless payment history and that the utilization is under 30%, preferably. If the utilization is over 30%, then that account may not help you as much as you would want it to. I would also recommend that if you are becoming an authorized user, that you want to make sure that you at least have a relationship with that person, just in case an emergency does happen where the balance is now being overly used, and you want to be easily able to get yourself removed from that account. So be careful if you decide to reach out to a company to pay to get a trade line, because you won't have any control over that. Also, to set your expectations, not all of the payment history is going to show up on that card. So for example, if it's a 10-year-old card, the fact that it's 10 years old will show up, but not the actual history from the past 10 years. Most credit reports are going to have the last 4 years, and you want to make sure that, again, that their utilization is under 30%. Step number 4 is going to be reporting your utility bills to your credit report. Now, your utility bills are going to be your basic bills that you pay every single month, and that's going to be like your gas bill, your electric bill, your phone bill may even fall into this category as well too. Now, one of the ways to do this is to actually sign up and get a credit report with Identity IQ. And once you're able to do that, then they're going to start reporting those utility bills to your credit report so you can start getting those points as well. You also want to add additional points by going ahead and add Experian Boost. And again, that is free in order for you to do so, because you don't want to miss out on any points as you're going through the rebuilding stage. Step number 5 is going to be reporting your subscription services. Now, your subscription services are going to fall into the categories of like Netflix, Hulu, Spotify, Apple Music, gym membership, things of that sort. So things that you pay for on a monthly basis where you are actually using your debit card or credit card, and they're going to start actually reporting that to the credit report. One of the easiest ways to do this is to actually sign up with a company called Grow Credit. We got that link down in the description below. And what they do is they have you actually pay everything through their debit card, but the debit card connects to your bank account. That way they can actually confirm that you have made that monthly payment. And what I love about this service is that they report that history to all three credit bureaus, so you can now get all of your points. When this system first came out, they were not able to report it to all three credit bureaus, and now you're able to build all of those scores at the same time. For more free credit tips, go ahead and subscribe and check out this next video.